As a trader in the crypto ecosystem, what prepares your mind for profit is not how diligent you're actually trading. What prepares your mind for profit is your ability to understand psychology of trading. So, as a trader, the success you're getting in the industry is leveraged on on your knowledge about the psychology of trading and how you can actually understand how the financial institution play around the psychology of trader. So if this is what you're interested in, to this video I will be taking you guys through 10 major psychology of the market that can help you scale up in the crypto ecosystem. So if this is what you're interested in, all right guys, let's kick. Hi guys, welcome to Inspire World with Linsky, where you can learn how to make passive income online and how you can upscale in the crypto ecosystem. So if upscaling your skill in the crypto ecosystem is your plight, then this is the channel where you can get it, where I share information, technical analysis, and things that revolve around crypto ecosystem. So in case you're new to this channel, hit the subscribe button and then turn on the bell so that you can get updates anytime update on this channel. And if you're a returning subscriber, I want to say thanks for always supporting this channel, and please, subscription is free on this channel. You don't need to pay to subscribe. All you just need is just to click on the subscription button and then turn on the bell. That's all you need to just support me on this channel. So in today's video, I'll be taking you guys through 10 major psychology of trading you should understand as a trader, and this is mostly peculiar to sport trader. So if you're a sport trader, this is very important to you, and if you're a future trader, you just need some bit of this so that you can understand how to scale up as a trader. Psychology of trading helps you to know how to take profit and how to sell, how to move out of the market, how not to panic, and how to be strong as a trader in the market. So when you understand all the psychology of trading, it makes you to stand strong against financial institution and the volatility of the market, because many traders in the market are very scared of the volatility of the market. They are very scared of losing out in the market, and they are very scared of missing profit in the market. So if you don't understand how the psychology of the market plays around, especially when you're seeing the technical analysis and you're trying to analyze and you're trying to position in the market, definitely you might miss out of the market even when you see big wins standing ahead of you. So I'll be running you guys through psychology of the market, the 10 major psychology of the market that can help you to scale up in the market. When you consistently have this at the back of your mind and you understand that this is how the market really is and this is how you should position your mind and your intellect towards the market, then definitely you see yourself scaling up in the market. All right, guys, then let me run you guys through the 10 psychology of the market. So the first thing is don't FOMO, buy the dip. FOMO simply means fear of missing out, and this is very peculiar to newbie and some traders who are very scared in the market. Whenever they see bullish trend, they immediately jump on the bullish trend because they don't want to miss out of the profit. And one of the things you understand about the market is very volatile. Seeing a bull market doesn't mean it won't dip in the next 1 second or 2 seconds. So what you should think about as a trader is, instead of you having the fear of missing out, then look for the deep market, which is the bear market. So whenever you see a bullish market, I will advise you don't go for the bull market, because the bull market is not promising, but the bear market is very, very promising, because at the point where you see a bear market, you can basically invest into it. So don't fear when you see profit market. Instead, wait till the market retest and you begin to experience a bear market, and then you enter the market. So that is the first psychology of the market. The second psychology of the market is don't panic, sell. One of these another thing you should understand, and this is one of the way financial institutions play on the intelligence of straight traders. They make you understand that the market is not promising. And so whenever you see a market dipping, like a market is bearing, you feel like, okay, you're losing out of this market and there's no prospect for profits on that particular market. You see many traders begin to sell out because they feel like the market is not going to bear anytime soon. But I will tell you the truth: when you see a market dipping, it's just a psychology thing on you, All you need to do is just to relax, calm down, because definitely the market that is dipping will definitely be a very soon. Okay, so instead of you instead of you being afraid at that point in time, just leave the market, allow it dip. At some point, the market will begin to experience a bull run. Then that is when you begin to make your profit. So don't panic sell when you see a bear market. When you buy a bear market and you see that the market is still going down, is still bearishing down, just relax. Okay, at that point when you feel like you want to sell, that might be the point when the market will start rising up. Okay, so just leave the market like that and allow it deep. Okay, at some point it's gonna be don't let it be like at the point when you panic sell the market retest and it begins to go up again. Okay, okay, that's the number two. The number three thing is don't be a pig in a bull and a bear market. The pig are always the ones that get slaughtered in the market, and they are the ones that don't always make the decision in the market. Okay, they are neither here nor here. They always want to jump to this side or jump to the side. And you need to understand that the bull and the bear market is always a tussle in the market, where the bull and the bear they tussle in the market. So at this point, don't be in the center of the bull or the bear, because you might get slaughtered in the market. So instead of you being a pig in the market, then make a decision to either buy or sell in the market. Then this is what you need to understand: the bull run in the market are those buying, while the bear run in the market are those selling. So this is how you understand: the bull market goes up while the bear market goes down. So you just need to make a decision and stand where you ought to stand in the market. The pig are the one that doesn't make decision in the market. Okay, so instead of you being indecisive in the market, why not stay at a point and then make decision? That is, it's either you want to buy in the market, or you want to sell in the market. So never you be a bear. When you see the market, analyze the market and choose a position in the market. Never you become a bear. That's under psychology of the market, you should understand. The fourth thing is avoid fake news. Avoid fake news. One of the things you should understand about the crypto ecosystem is there are a lot of news that rave around coin, and this might really affect your trading skill or trading psychology, because sometimes you might get fake news around Bitcoin, that Bitcoin is experiencing a bull run, and this might prompt you to want to buy Bitcoin. At the end of the day, you might discover that it's a fake news, but if you eventually put your market in a deep market. So what you need to do is, at this point, avoid fake news. As a crypto enthusiast or somebody who is interested in trading crypto coins, okay, just stay put, get the best deals, which are the legit, and leverage on the real news, so that you won't liquidate your fund in the market. So the fourth psychology of the market is avoid fake news. And sometimes the financial institution sponsor fake news so that they can sustain money. When they sponsor fake news in the market, definitely many people put their money and they get liquidated. So go for valid news. Okay, this is going to help your trading skill. The fifth thing I'll be talking to you guys about is always learn to set your stop loss. I've done video on risk management. I'm going to put the link in the description so that you can see my video on risk management. And one of the rules of risk management is always remember to set your stop loss, and always set your stop loss at 1.5%. So in the psychology of trading, always remember to set your stop loss, because stop loss help you to protect your fund in case the market is volatile or going against you. Stop loss kick you out of the market. Okay, so always remember to set your stop loss while you're trading. The financial institution use volatility to kick many person out of the market, but if your stop loss is in place, then your fund is protected. And another thing within the setting of stop loss is, when you see profit, take profit. Never put more income on losing trade. Okay, when you see profit, take profit. Understand that rich people always they always allow profit to run, while the poor traders always allow loss to run. Okay, don't cut your profit short. Okay, when you see it, take your profit immediately. Okay, the system is always remember to cut your losses short. Okay, when you're trading and you see loss in the market, don't allow the loss to linger. See, or losing a huge amount of money is very detrimental to your capital. Okay, so when you see losses, especially when you take a trade and you discover that a trade is the trade you've taken is already going against you, you're already accumulating losses. Cut the losses short so that you won't liquidate your fund. Okay, when you see loss in the market, cut it short immediately. This is the sixth psychology of trading I want to share with you. The seventh psychology of trading is avoid newly listed crypto. I did a video, and check the description as well. I'll put the link in the description where I talk about how to discover newly listed crypto before they pump, before they are listed on blockchain. So if you're a trader, especially you're a new trader or you're a professional trader, one of the psychology of trading is avoid newly listed crypto. I'm not saying avoid it totally. Like for the first 1 or 2 week of listing, avoid it, because at this point it's a test run, and the big fishes in the ocean might have acquired the whole thing before you get there, and they leave you to the crumbs, and at the end of the day the market dip on you, and it might not retest anytime. Okay, so one of the things you should do as a trader is avoid any newly listed crypto. Any crypto you see the advertisement or the news that is a newly listed crypto and is trending, for the first 2 weeks of release, don't trade it at all. Avoid it. This is the psychology you must understand, because the financial institution that built this coin, they have the white paper, they have the reason for building it. So the first 2 3 weeks of releasing that coin is for test run, so that you won't liquidate your fund. Don't trade it at all. Leave it, see the behavior of the coin, check those buying it, check the supply and the volume, and check the capital. This can also give you more information about this newly listed crypto. So the seventh psychology of trading I'm telling you today is avoid newly listed crypto. The eighth psychology of trading I'll be discussing with you guys is don't revenge trade. Many of you know what revenge is all about now. Something go against you and you want to revenge because you feel like you've been cheated, right? Don't try it as a trader. If a market go against you, just allow the market go. Redo your analysis and find a profitable market to create position for. Don't, because a particular market kick you out of the market or you liquidate a bit of your fund and you want to reverse trade, you might end up being a pig in the market as well. Okay, so allow a market that is not profitable, allow it to slide. Go back to your drawing board, make your analysis well, and reposition in the market. Don't revenge trade. This might be detrimental to your trading analysis and to your fund. Okay, instead of that, allow the market to go. There's a rally that say let the sleeping dog lie. Okay, so don't revenge trade. It might be detrimental to your trading. It might be detrimental to your trading skill, as well as detrimental to your fund. Okay, so let's go to the number nine. Ninth trading analysis I want to discuss with you guys is set realistic goals. As a trader, you want to trade, you want to venture into the market. Set realistic goal. Don't tell yourself, before the end of this month I want to make $10,000, I want to make $1,000. You understand? You need to check your capacity, check your trading skill, and check how your ability in analyzing the market. Okay, so set goals you can achieve. Okay, in a day I want to make $50, $20, $30. Set realistic goals that can help your drive and motivation in the market. Don't set goals that you can't achieve. This might affect your trading ability, and it might put you at the edge of competition. Okay, the major thing is make sure you're setting goals that you're achieving, because every goal you achieve prepares you for another opportunity to trade. Okay, never set goals that are not realistic. Set goals you can achieve as a trader. The last thing I'll be discussing with you guys is learn to celebrate your small win. Trading is all about losing and winning. So if you lose, you might get depressed. No, the little winning you're making as a trader, celebrate that little winning. That $50, that $100 you're making, celebrate the win, because it will prepare you. It will prepare you for another avenue to trade and make more wins. Little motivation prepares you for a bigger one. Okay, and little motivation prepares you and tell you that there is always light at the end of the tunnel. So one of the trading psychology is, after all the whole back and forth with the financial institution, at the end of the day, if you're able to scale through and make like $50 or $100 ahead of the whole back and forth in the bull and bear market, my dear, try and celebrate that little win, because it's an edge that is preparing you for a bigger win. Okay guys, that's all about this video, and if you really find this video very valuable, please subscribe to this channel and then turn on the bell in case you're new to this channel. There are a lot of things you can learn on this channel. I share news, I share information, technical analysis, basic thing that can help you upscale in the crypto ecosystem, and some major secrets you will never hear that you have to pay money for on this channel. I will share with you for free. So check my description, join my community on Telegram, join my community on WhatsApp, be part of this community, and every time ask your question in the comment section. I will definitely reply to your answer. And if there's anything you find difficult around technical analysis, hit the comment section. I will definitely reply you. Okay, all right, till next time I see you guys on the same channel, don't leave without showing me that big love of subscribing, join the community. See you next time. Okay, bye.